All right, Alaikum, and welcome to the UIF Community Podcast, where we spotlight inspiring stories from leaders, entrepreneurs, and changemakers in the Muslim American community. Today, we're excited to sit down with Sister Sirai Farah, a dynamic real estate investor and entrepreneur whose journey into financial independence is as powerful as it is relatable. Her firm, Brickhaven Capital, currently has over 210 units and $95 million under management. Sarai has carved out a path in real estate while staying true to her values, and her story is one that we think will resonate with anyone striving to build wealth with purpose. So we usually start the show with an economic update from Ijaz. However, Sarai, we also want to get your professional insight on the market during this part of the show. But Ijaz, let's discuss the current real estate market before we start our main discussion with Sarai today. Floor is yours, Ijaz.
Hey, As-Salaam Alaikum, everyone, and welcome, Sister Sarai. It's such a pleasure having you on this podcast today. I think we've gone past close to 180,000 listeners now, from last check, from what I understand. So, a lot of audience members love when we bring on people with real estate backgrounds because they can really relate to that. And some of them are really trying to forge their own journey into the real estate market. So, I'm sure your contribution to this discussion would be very much appreciated. I'm going to quickly talk about the housing market. So, we always start off by giving a little update to our listeners what's happening in the market because we're sort of catbird seat over here, keeping an eye on the applications coming in. We serve 32 different markets for home financing, and also, as I've said in the past, a lot of my views are shaped by the views of experts in the industry, economists, hedge fund managers, home builders, CEOs, etc., who I listen to sort of to keep a track of what's happening in the market. So with that said, I'm going to summarize it this way. The market currently, basically the tale of two cities, kind of good news and bad news. So good news really, I'm going to cover a second, but bad news, I'm going to right off the bat address it. Number one, we really felt that the mortgage rates by spring, summer would go down a little bit, making home ownership more affordable. But unfortunately, that has not happened. And affordability still is an issue. A lot of the first-time home buyers are unfortunately getting priced out of the market because while rates have slowly crept up over the last 3 years, the home prices have not really come down as much. And a couple of reasons right now why the rates are still going higher. Number one is all this tariff discussion, tariff talk about what's happening, and that's putting a it's keeping foreign investors out of the market who are afraid to invest in our markets. And that's why the rates are kind of heading a little bit north. And secondly, there's talk of recession, and all these concerns are putting some of the buyers on hold as well, and giving people a pause maybe to just step back and rethink their decisions for any large purchases, if you will. So some of these cross currents are there that we're mindful of. But the good news that for the first time, I think in a few years, we've noticed is there's a home inventory starting to bulge a little bit. We're seeing more and more homes coming into the market. And for the first time, I think in maybe 3 to 4 years, I'm coming and saying that this market is really turning from a seller's market to more of a buyer's market right now. And as more homes hit the market, our customers, our buyers who are walking around with pre-approval letters, they will be able to negotiate better pricing, better concessions from the sellers, which we didn't have that luxury before. Before, for every home, you had multiple offers and so forth. Now, I think because of the inventory surge, buyers have an advantage now, in my humble opinion, in most markets. I'm not going to say all markets because, as Sister Sarai can attest to, real estate is very local. So she's in Atlanta, I'm in Chicago, Umer's in Dallas. Every market will be different. So, but in general, the more inventory is hitting the market, that's gonna be very beneficial for buyers. And one thing that we never talked about last few years, now we should start talking, is buyers can now talk about seller's credit. They can talk to sellers to give some money towards closing costs. If you're running out of, if you're short on down payment funds and so forth, you can have the seller, provide you with usually it's up to 3% of the purchase price of the home. They can offer towards closing costs and so forth. That's something where UI representatives are very good at coaching you how to talk, how to discuss, and we can help you and guide you on that. So if you talk to our representative, they can help you, but bottom line is seller concessions are coming into place. So there's some bad news. We're hoping rates will be better, but also inventories are not going up, so that should be very favorable to our community who's looking to buy homes. So if you are looking to buy a home, My recommendation is don't stop. You can always buy a home right now with what the rates are, but you can always refinance later too. So you don't want to give up the opportunity to get your dream home, waiting for rates to come down and so forth. You should go ahead and buy, and then eventually you can always refinance to lower the price, rates and your monthly payment if you have to. Sarai, I'm going to turn over to you, just to because you're in the real estate market too. So, what are your thoughts on the just the macro outlook? What's happening? What are you seeing on your side in the real estate market, please?
Yeah, so I think right now, because since I focus primarily on multifamily, it's a bit different than single family. So, but I think right now is an excellent time to buy. I think with the markets shifting, you kind of have to take it with a grain of salt. Be aware of what's going on, but don't let it affect you. And as far as being fearful, to not want to buy. So I think you have to kind of have that natural balance. I know when I first started off, I took, everything that I seen in the market changes very literal. And it's constantly shifting, and I passed up so many opportunities because I was scared, right? Because I was like, oh, it's not the right time, but it's really never the right time. So just do your due diligence, do your research, but continue to do what you want to do.
In the stock market world that I came from initially, there's an adage that markets climb the wall of worry. So there's always something to be worried about, something to be fearful about. But you can't hold your life, because you feel like bad is going to happen, right? We have to live our life, and then we have to adapt. And I tell our team, sales team out there, and Umar knows this, that we're not in the business of predicting, we're in the business of adapting, basically, right? So we adapt to whatever conditions that are good or bad, and I think that's the larger point you
Yeah.
made. Umar, if you're talking, maybe speak up a little bit. I was having a hard time hearing you just for the.
Yeah, no, I was just saying, she was saying, Sarai was saying, what a lot of people worry about is, if it's the right time. But I think maybe even more precise is, they're always looking for the perfect time. And that's, I think, is never the case. Like, Jazz, you're always bringing up, on our show and with customers, they ask, what is it a good time to buy? And well, if it's for your situation, it might be. Yeah, I mean, you have to move, from the suburbs closer to the city because of your job. Then yeah, you have to do what you have to do, right? So for every individual, every family, it's going to be a different situation. And
Mhm.
run the numbers, talk to an expert, right? And from there, then you can figure out what's best in your scenario.
One of the things you always hear also, from my reading, is don't make good the enemy of great. So if you're always seeking for greatness, you will lose good opportunities. Sometimes that is all you have, and I feel this is the market where good is good enough right now. There is no perfect market. So I think, people approach me all the time. Is it a good time to buy? Should I buy? Should I wait? And my answer always is, if it's a primary home you're looking to buy, you just got to do it. You can't wait for it. Now, investment properties, I'm sure Sarai will tell you, you have to be opportunistic. You can't just go in and buy at any given time, because the pricing may not be there, or the terms may not be there. So you got to be opportunistic when you strike, when you pull back. But that's a little bit different situation. With that said, Umar, I'm just going to go ahead and have Sister Sarai just jump in and get started. Sarai, if you want to talk about your background, whatever you want to share, so our audience members get to know you a little bit, and that way, we can get going from here. Please go ahead. Thank you.
Yeah, for sure. Thank you guys for having me, by the way. I really love getting the chance to talk to the community and, just let them know that even though we're in the West, and if you want to get into real estate, interest is a big factor, you can still do it, and you can still do it at a big scale. So thank you guys for having me. So just to back up, I started real estate back in 2020. So when we talk about terrible timing, right, with COVID and everything, and that's when I started. Initially, I was a student. I wanted to be a doctor, kind of typical immigrant story. And I was living in Cleveland, Ohio. I knew I didn't want to do that, but I was just doing it to please my parents. And I just quit. Didn't tell my mom, didn't tell anyone. And I remember my mom called me one time, and she said, because I used to complain a lot, and she says, "Oh, you must have gotten into the rhythm because you don't complain anymore." I quit 6 months ago, mind you. And I was like, about that. I quit school. So, that was obviously a big problem, but I didn't even quit for real estate, right? I quit with no plan. I just knew that what's the point of going down this path, especially, you know, being a physician? It's a long process. So I just quit. And then I got into corporate America. I ended up getting into HR and talent acquisition, which actually ended up helping me when I started my business. But I also knew the corporate life wasn't for me. So one day, a friend of mine actually gave me a book. It was called If You Can't Wholesale After This, I Have Nothing Else for You. And it was a book about wholesaling real estate. And if you're unfamiliar with wholesaling real estate, it is essentially when you find a seller that has a problem, right? They're either going through pre-foreclosure, their property is vacant, they're not taking care of it, they have liens, whatever the issue is. It's a seller that has a problem. You are doing cold outreach, so you have no idea they want to sell, right? And then what you do is you cold call them and you get the property under contract at a discount because the property needs rehab. So let's just say I get it under contract for 100K. I don't have 100K, right? So I will go to an investor who is a fix and flipper or a buy and hold investor, and then I would tell them 115. And I would pocket that 15K difference. That's how you get paid. And so that's what wholesaling real estate is. So to back up a little bit, I read the book. I was instantly intrigued. And that Monday, it was a Friday when I read it, I looked up the author, found out he was 30 minutes away from me in Akron, Ohio, and he had a mentorship. It was $8,000. I didn't have $8,000. So I was like, do you guys do monthly payment plans? And he was like, yes. And it was $1,200, which was more than my rent at the time. So it was a very interesting moment for me because I'm very analytical. And the fact that I moved so quickly let me know that this is right. So I just jumped in. We did the monthly payments. That first month, I made $9K. I did a deal. So I made back my mentorship amount. And that's all I needed. I just needed proof of concept. I just needed to make sure this was real. And 5 months in, I was able to quit my job. And then the first year, you know, I did close to almost 600K, which was, I've never seen that type of money at the time. So I was like, whoa, this is so cool. So that's how I started wholesaling real estate. And then I started doing fix and flips and ended up also vertically integrating a virtual assistant business. So I was doing that. So things was going great. And then came to another problem. I was like, okay, I'm making money, but all I did was create a high paying job for myself. I had no business skills, so I didn't know how to automate anything, right? So it was heavily reliant on me. If I stopped working, we wouldn't make any money. And I also wasn't building any generational wealth, which is a big problem. And I think sometimes in, you know, our community, especially the Somali community, you know, people are successful, but it dies with them. And there's no generational attached to it at all. So I didn't want that. And I ended up actually wholesaling my first multifamily building. So that's how I got into multifamily. The buyers would pay me so much more. So I'm like, I wonder why they're willing to pay me so.
For those of us in the audience who don't know what wholesaling means, can you just quickly touch upon that definition of that so everybody's on the same page here?
Yeah, so wholesaling real estate is when you get a seller that has a pain point. They're either going through pre-foreclosure, vacant properties, tax liens. They're having issues. You negotiate with them. You get their property under contract at a discount. And then typically, because you don't have the money, you will get a buyer. So let's just say Umar is a fix and flipper. I go to Umar and I say, hey, I have a discounted deal for you. Umar loves it because it's so discounted. He can't get it on the market, right? It's off market. And then I tell Umar 115K. I got it under contract for 100. I pocket that difference. So you're hustling. It's a hustle.
It's remarkable. And before you go on, I had a smile on my face when you said you invested in that, not having any money, but still investing in learning and education. This is something that, you know, I always preach to our team also, that don't hesitate to spend money in marketing, investing in your knowledge, because everybody wants to save the last dollar. I get that. But you took that chance and you said, I believe in myself, but I also at the same time, I know what I don't know. And then by going through this program and figuring out however you have to figure out the money part, that just propelled you next level, right? So there's a lesson in that you have to be smart, you have to be prudent, you don't want to fall for scams, but at the same time,
Yeah.
you have to be willing to invest to learn the business and go from there. So, but that was a great point you made, and I wanted to applaud you for that.
Yeah,
So
I
keep
just
going.
want to note how Ijaz was just cheesing. He was so happy. I was just looking at his face. He looks so proud of you, Sarai. Like looking at him, I was like, man, he looks so proud of what she did there. And I know that resonates big with Ijaz. He's I've been at UIF 11 years now, and he talks about this all the time. Invest in yourself, learn more. You're gonna get better, right? And that's a big thing. So great to hear that. So.
Umar and I have worked way too long together, so he knows with my smile what I'm thinking and all that. So he was smiling when your story was being said. I'm like, I'm sure he knows what I'm thinking, and I appreciate that. Go ahead, Sister Sarai. Please carry on.
Yeah. No, I agree with you. That's something too. I had to overcome mentally, because you want to do these big things, but you're not willing to pay for it. I mean, which is ironic, because we got to pay for college, right? So it's like, that's the biggest bill that doesn't really, especially depending on what you get a degree for. It's not self-development, right? So you absolutely have to. And another point too, Ijaz, is not letting analysis by paralysis kill you, because that's a that's a big one, which I had to overcome. But so yeah.
I have a question for the audience, because some of these questions I think are important. How do you distinguish between the right training, and because I see so many of these programs, late night TV, hey, we're going to teach you the method how to become rich, etc. And I promise you, not all are going to be truthful, and you're going to learn. They're trying to make money off of people who are already down and hard on their luck. I had been to one of the my experience was many years ago. I went to this 3-day training class in Chicago for real estate, and it was like $100 you had to pay, which was not that much. But very soon it became very clear to me that these guys are trying to scam people, because the big plan they were trying to sell you was $15,000. They didn't get to that until the third day, but along the way they're trying to teach you how you can go get your credit card limit increased, and extend it from, like, if you're 5,000, make it 15,000. Because, and I don't know in the beginning, why are they trying to set this up for credit card? It's a real estate course, but later it made sense to me. These guys are purely trying to get people to put that course fee on their credit cards, and eventually God knows what happened. But to me, it just felt like very scamish. So, is there any particular course or any teacher or mentor that you recommend in general that people should look into at this point in time?
So is there? I just want to confirm. You asked, is there a mentor or teacher that I recommend personally?
Popular course like that you recommend, like it's a good real estate course that if somebody wants to embark on this journey like you did, is there any particular course, or do they just do their own research and figure it out?
So I have a suggestion when it comes to multifamily, but I don't on the single family side. But for multifamily, if you're interested, XI Capital has a great mentorship. So I would highly recommend them. And to answer your question too, Ijaz, about like how do you know if you are deciphering between the fake, right, and then the actual good mentorship, especially if you're dropping thousands of dollars. The biggest thing I would recommend is reaching out to the students in that mentorship, because they'll tell you the truth. If you just look up online, you just search on Instagram or Facebook and just, do a hashtag or something, you'll be able to see somebody who posted something about that mentorship. And if you don't, that's also a red flag. Like no student is posting about this at all.
And saying, "Oh, this is a great lesson, tutorial, whatever." Right? Yeah, makes a lot of sense.
Yeah. So that's really the best way is to kind of weed out all of the nonsense. Is just reach out to a student. They have no reason to lie to you. As a matter of fact, if it's not good, that's something they want to talk about because they're upset that they wasted money. So they'll let you know. Yeah. So yeah, they'll let you know. So that's what I would recommend when it comes to mentorship. But also don't overextend yourself either. I don't believe in. Yes, you should believe in yourself, but if this is something that if this doesn't happen for you, and you lose this money, things are not going to go well, because that also highly discourages you as well. So that's another thing I would recommend.
Coming back from your journey again, so you did that wholesaling, basically trying to connect the eventual investor to the seller, etc. You did that, then you got into a fix and flip and so forth. So pick it up from there. How did your journey keep going from there?
Yep. So yeah, so I was like, it's time to build generational wealth. And at this time, I was still living in Ohio. I started to try to go down that path, but again, I was so busy with my current businesses, and this needed a lot of time. So I took another leap of faith, and I dissolved my wholesale company and my VA company, which was very difficult to do. But alhamdulillah, I'm so happy that I did it because it needed to get done. And but now, yes, I have experience in this space of real estate, but in the multifamily space, brokers, when you buy a deal from a broker, it's high six-figure commissions. So they really want to make sure you're legit before they send you anything. They don't even want to waste their time. It's different in the single family space. So I had to overcome a big thing, which is credibility. No one would give me any money because I didn't own any real estate. I've never done it. So raising capital was difficult. The brokers, I remember one broker said to me, he said, "You seem like a passionate young lady, but your passions won't pay my commission." And I laughed because he's right. So I was like, you know what? Okay, well, because my market was Atlanta, Georgia. So I was like, I need to move there. So I moved. From that conversation, I just moved to Atlanta.
Atlanta, Georgia.
Why Atlanta, Georgia? So I had already a few friends that were in the multifamily space that talked about that market. And I already wanted to move anyway. So it felt like a safe market for me to invest in. And it's a great market for multifamily, even in the single family space as well. So because I already knew there was people there that I can kind of lean on, it felt like the safest option for me. So that's why I did it. So yeah, so I moved to Atlanta, and then it took me a year and a half to finally get my first building. And part of the biggest reason was at first I wanted to start off small and go with something that was like a 20 unit multifamily, 30 unit, kind of something that's more comfortable. And then an operator that has thousands of units said, "Hey, why don't you just go for 100 plus units? Like the work is the same, just go for it. The numbers are only bigger." So I was like, you know what? Okay, I'll do that. So the reason why it took me so long is because now I had a big issue. Before, when I was wholesaling, I wasn't buying the properties. I was just assigning it, is what you call it. So with multifamily now, we're talking about, I need leverage. We're talking about mortgages. So now I have the issue with interest. And it was, all of my friends, my circle that were in real estate were non-Muslim. So it felt very lonely. I didn't have anyone to talk to this about. They didn't understand. And for me, I was like, okay, my faith is important to me. So how do I not shrink my goals, but also not compromise my faith? So for a long time, I felt very paralyzed, and I was doing action, but it felt uneasy for me. So I wasn't going at the speed that I wanted to. So I tried to justify it and say, well, maybe if I'm not on the loan, it's okay. So that's what I told myself. So that's how I racked up 320 units. And I was able to pull that off in 5 months, alhamdulillah. And my biggest thing that I learned was, okay, I'm really good at raising capital. And then I just I prayed about it. And then in Ramadan, actually, I got the clarity of like, you know what, start a fund. You don't need to do leverage. Just buy the buildings cash. You can do this. So here I am now.
So you touched on cash. Talk about that a little bit. How did you suddenly raise cash like that? It's not easy for people to do that.
How did I suddenly start raising capital?
Yeah, like you said, you said I'm going to raise cash to do the investment. So touch upon that if you can. Like, how did you raise the cash to buy the unit, buy the multifamily building? How did you do that? How did you come up with that cash?
Yeah, so it was trial and error. What I started to do was I first started to going to a lot of real estate events. I like to teach. So this is what really helped me a lot, especially when it comes to investors. You don't want to pitch anybody anything. I don't like pitching. I don't like things to be salesy. So what I did was I found people who were interested in passive investing, and I just educated them. And I was honest, and I told them hey, I don't really have any experience in this, but the people that I'm going to be partnering with do. So that's why they felt comfortable with that. It's I don't, but they do. And I wasn't trying to sell them hard or anything. I was just letting them know, like, hey, this is what you can do. If you're a busy professional that's, interested in investing in passively in multifamily, the returns are honestly really great. And you're not doing anything. And I would just start teaching them. And then I started to really go heavy on LinkedIn, started doing like newsletters where I would just each week just educate. And then one day I got a deal and I was like, okay, are people going to actually give me money? And they did. And I was surprised.
What type of deal was it? Was it like a 6-unit or 8-unit? What type of unit?
No, it was
numbers.
It was 100. It was 110.
$110,000.
No.
Yep, 110 units.
It's a unit building. Okay.
Large,
Yep.
If you could walk us through some numbers on that, so how much was what was the sort of the rough price and so forth? Just
So the total purchase price was 14 million. So at this time, right, I'm doing the thing where I'm justifying it and I'm not on the loan. So it's a $14 million deal, and we raised 4.5 million for that. And I didn't raise the whole 4.5. I raised 2.2. So yep, I raised 2.2, and then what we do is something called syndication. That's how it's set up. So GP, which are the operators of the deal, they run everything. And then the limited partners are the passive investors. So we do a split. Typically it's 30-70. 70% goes to the passive investors. And that's how you structure the deal.
So you had a few partners in the syndication deal. You have the general partners, you and a few general partners are the ones who are running the deal. And then you have these passive investors who are these limited partners who are coming in, who are actually funding the deal. Did the general partners put any of their own skin in the game? Did they put any money also as part of the initial down payment before you asked limited partners to come in with the rest of the money? Or
so sometimes you do, sometimes you don't. Like with that particular deal, I didn't, because I just didn't have it, because I dissolved everything. And then it's now a year and a half later, right, with no income. So I didn't personally, but the other two deals I did. I think it's nice to have skin in the game. It makes people feel more comfortable. But you don't necessarily have to. And I think if the investors, it's all about just being honest. If they ask you and you don't have money in the deal, just tell them you don't have money in the deal.
Yeah. No, I get many investors come to me, many people like you yourself come to me for my own investing, and they want me to be LP in a deal. I've looked at many different investment opportunities that way. Sometimes I'm passing because I also have other alternatives that I can invest in. But so in general, you put that first deal together, 110 units. How many partners did you have to initially in the general partnership side over there? Like, and what was their roles? Like, what were you doing? What was the other partner bringing to the table, and so forth?
So it's just me and another partner, and so it was just two of us, and he had all the experience. So he actually needed help with the raising capital. So that was the value I brought. And then in return, I was like, hey, we actually ended up splitting that equity in half. But I was like, look, I'm willing to take even 5%. I don't care. I'm just doing this because I want to learn. So the first deal was about just getting your foot in the door.
So did it have like a monthly income component with an exit strategy? Like after 5 years, we're going to sell this building out and profit. So you'll have some capital gains at the end of 3 years, 5 years, like an exit strategy. But each month we're also going to give you. So what was those numbers, like dividend yield? And if it did sell out, how did you guys end up doing is where I'm going with this.
Yeah, so the breakdown is what we did in that specific model, because we were utilizing leverage, is what we do is we tell now it depends on, right, how much capital you contribute. But just in general, what we would do is, in this specific deal, we actually didn't take any money, the GP side, because we wanted to, at refi, just pay everyone back a lot quicker. So we split up majority of the cash flow to the investor. So we would do monthly distributions. So that would range depending on how much you contributed. But let's just say on a 100K contribution for that year, you would make about 22 to 24K. So you do the math on that monthly.
So you're giving out about close to 20% return to investors on income, you're saying? That seems a little high.
On that particular deal, because that one was it was heavily discounted. So on that particular deal. But to give you in general, though, when we were using leverage, now that I'm not using leverage, it's lower, but we were shooting for about 12 to about 17%. IRR is what we were shooting for. So you would have your monthly distributions as the LP, right? And then what the exit plan was, bring the value of the property up, because it's called the value add. So you want to come in, you want to renovate units, you want to increase rents, you want to decrease expenses, have forced appreciation, because that's the great thing about multifamily. With single family, your house can be absolutely decked out and beautiful, but if the properties right next to you don't sell for a certain amount, you're capped, right? But with multifamily, it's not like that. You have a lot more control with the appreciation. So what we want to do is, force appreciation, refinance out of the property, give the capital back to investors, or give them the option to where they can just stay in. And then at sale, they also get profit share as well. And that'll depend on what they invested.
So Umar usually asks really good questions, but because we're still on the line of multifamily, I'm asking a few questions.
No, Josh, go ahead.
His questions usually are better than my questions, but since I'm pretty on running along with you here.
I'm the novice here. I'm listening and learning as well.
Thank you,
It's
Umar.
like a free course for me, Sarai, so I appreciate it.
Believe me, he is going to have a lot of good questions at the bottom. I'm going to be the listener at that point in time. So Sarai, so when you choose a partner, let's say somebody wants to go in this route, right? There's this multifamily, you're buying up larger units. You came in and said, hey, my expertise is I'm going to reach out and find investors to fund the deal.
Yeah.
So the skill set you're looking in a partner who's going to come in, what type of partner are you looking for who can help with everything else other than the bringing in the capital, right? So what type of partner are you seeking, or should one seek to sort of start building this multifamily portfolio, if you will? So.
Yeah, so when you're for that first deal, right? I brought the capital, and I said, hey, look, I'm willing to get less equity, but teach me. That was what I needed to learn. I wanted to learn. I had no idea how to, run a renovation and construction. I didn't know how to, deal with these property management companies. I didn't know anything. So it was basically, hey, I'll bring capital, but also teach me, right? But when you are looking for a partner, you want complementary skill sets. Initially, I made the mistake of choosing partners that I like, right? Because naturally you gravitate towards people that are like you. And it's like, oh, like I like this person, but no, your partner, I mean, sure, you're supposed to like them, yes, but you guys have to almost be opposites if you really want the partnership to work long term. So definitely whatever you are not good at / you don't want to do, that's the thing, the skills that you want to find in your partner. And another thing too that I do before I choose a partner as well is I make them take a personality test.
Wow.
No kidding.
I do. I'm like, hey, let's take.
Let's do it. I'll do the personality test. Go.
Yeah, I make them take the DISC personality test. I'm like, hey, let's just because I want to know who this person is. And my mom has always told me this. She told me this when I was younger, and I never understood. But she said, you don't know anyone unless you live with them or a problem occurs, right? There is no scenario where you're going to live with your business partner. So you're only going to see their true personality when an issue occurs. And at that point, it might be too late. So I want to do as much due diligence on the person as possible.
Amazing idea. And I feel like my wife should have done that 20 years ago when we married, but it's too late for her now.
Well, if that was the case, she wouldn't have married you, Umar, so that's a whole different problem you'd have had.
Well, that's what you ruined the joke, Ajaz, but we'll continue.
No. So Sarai, what are some traits that you're looking for? Obviously, being trustworthy and all of that is already given. But other than that, when you do this personality test, what are you hoping to find in your partner that you think, okay, check, I'm willing to work with you?
So there's a few things. First, I want to learn kind of their personality style, right? Like, is this person are they more quiet? How do they like when an issue occurs? Because I'm very straightforward, and sometimes some people don't like that. You kind of have to soften things up for certain people, and I don't mind doing that, right? Because at the end of the day, I just want the partnership to work out. So I want to learn how do I deliver things to you when their issue occurs? How are you when when problems occur, or when things, or how do you act when you're overwhelmed, right? Certain things like that. So there's things like that where I'm not looking for something particular. I'm just trying to learn the person. But on the other side, as far as what I'm looking for, the biggest thing I look for is alignment, right? Is are we aligned? Do we have the same goals? Right? So if we don't, that's where the issue happens. And if I am bringing more value to this partnership than you are, that's a problem, because why are we partners? What is the point of this?
Do you have I'm just thinking, like, do you create some type of trust or LLC to protect yourself from liability? I'm sure that is the case, right?
Yeah. I have my estate planning set up. So we the holding company, and then everything else is underneath.
Sure, you have like a
Yeah.
team of attorney, you got an attorney accountant,
Yeah.
you got all types of people working with you,
Yeah.
to make these deals happen, protect yourself from liability, financial issues, things like that, right?
Yeah, absolutely. You have to. You always hope for the best, but plan for the worst.
I think Umar's question, if I'm understanding him correctly, is from an investor perspective, right? Like, I don't know you, and I don't know your partners. So you're coming in and saying, "Hey, listen, invest money with me." So
Mhm.
how do I get protected investor that you're not going to take my money and run away, right? So what do you tell me to give me that peace of mind and satisfaction that, okay, I'm working with trustworthy people, and putting trust aside, there is certain backups I have in place so that I don't lose my money. So how would you answer that?
So for me to build that trust with investors, that's why I don't like to pitch. And I like to lead, and this is why I love what you guys are doing here with this podcast. Is you're not expecting anything in return. You just want to give value to the community. So that's honestly how I approach it. The trust is just inevitable when you're just constantly teaching people for free. You're not asking for anything. And also the biggest thing that I do when I teach is I don't hide the risks. I tell them, like, hey, this can happen, this can go wrong. If I die and just, or if I go into a coma, this is where your money will be. If I just run off with your money, this is what you can do. So I lay everything out on the table. So before an investor could even give me an objection, I already told them what it was. So that's the thing that has helped me the most, is instead of selling and telling them all the beautiful things, I tell them the opposite.
So Sarai, you're looking for, you say investors, right? You're talking about accredited investors, correct?
Yes.
Okay, I don't know if either of you maybe just educate our viewers on that, because people have to go through a process to become an accredited investor, correct?
Yes. So an accredited investor is, you have to be making at least 200K or more annually, or 300K with a spouse combined, or have $1 million net worth, excluding your household, your main residence. And what we'll do is, when, say, an investor commits and they want to, come in and invest with you, they have a whole bunch of paperwork that they have to sign, and then the attorneys will actually confirm that they're accredited and they meet those criteria that I just said with the income and everything. So you can't, the money is verified.
Yeah, so
And
it's
Yeah.
like
the
it's a
government way
serious,
of saying,
yeah.
the government way of saying that, hey, listen, not every person is sophisticated enough to get into these private placement type of deals. So if you're considered an accredited investor, hopefully you are savvy enough, and you make enough income to get into some of these private transactions. So it's a way of the government trying to protect the common man, if you will, those who are, don't have that means, financial means to invest. Supposedly an accredited investor can put in this, and God forbid the investment doesn't go as planned and you lose money, at least the person who's accredited is losing based on his knowledge and savviness, not an average person. That's sort of the thought behind it. So that's good to know. Great question, Omar. Keep going, Omar.
Yeah, so I guess we're coming up on the hour, right? But I wanted to ask, you just started this journey not too long ago, right? Like in 2020. So we have a lot of young professionals. They may want to get involved into something this maybe soon or later on in their professional journey. They want to invest, or they want to get into this line of work, right? They see the success you had and they're inspired. So what would be kind of the do's and don'ts that you would recommend to them? How can they get started? What are those initial steps? And then also, I always like to ask, knowing what you know now, what would you do differently potentially, or what advice would you offer to these people who want to get on the same journey as you?
Okay, yeah. So the first thing I would suggest is get very clear about what you want. Nowadays, entrepreneurship is very glorified online, especially with the younger community, and everybody just talks about the glitz and glams, but this is really not a fun life. And sometimes I miss just having my 9 to 5 and clocking out. And there's beauty in that as well. So getting very, very clear about what you want and being honest with yourself, like, are you willing to put in the work is the number one thing. And do you want to be an active investor like me, or do you want to just be involved in real estate but do it on the passively side while you focus on your family and your career? So that's one thing. Now, assuming you do want to become an active investor, the next thing I would do is figure out what you want to do. Because in real estate, it's called the shiny object syndrome, because there's so many paths. And you can't just start off with wholesaling, then go to fix and flips, then now you want to do multifamily, now you want to do development. It's because there's so many umbrellas under real estate. You have to also get clear about what you want to do specifically. So if you're somebody who wants to get transactional money, quicker money, right? That's when I would suggest wholesaling. That's when I would suggest fix and flips. If you, that's when I would suggest short-term rentals, so Airbnbs, right? If you want to do more passive and generational, that's when I would suggest buy and hold. It doesn't have to be multifamily. You could start off with single family, and then move your way up to multifamily. So differentiating that as well. And then after you have that down is now, okay, do I have the money to invest in a mentorship? If I don't, I have to network and meet people, because it's okay if you don't have the money to invest right now. You can there's so many places you can find free information, and then you can just go to networking events, and there's a lot of people who will teach you, in return give them value as well. So for example, let's just say you want to get into wholesaling. Hey, I'm willing to cold call for you for free to learn. I wish I had that. I didn't have it. You don't have to worry about marketing. You don't have to worry about managing anything. You're literally being taught for free, and all you have to do in return is give up your time. No one is really going to say no to that. So you can get creative if you don't have money on how you can learn something from people who have done it before. So now, Umar, to answer your question on what I would have done, the biggest thing I regret is when I went full in on multifamily, I wish I would have at least kept my wholesale company at a certain level, because I went from making all this money to nothing was coming in. And that mentally messes with you, especially when you don't have a clear path of, okay, how long is this going to take? And with multifamily, it costs a lot. Like, the appraisals are like 10K plus. The due diligence are 5-figure due diligence. And if you don't close, you lose that. So I was spending all this money and had nothing coming in, and it was very stressful. So if you are currently working a job and you want to get into real estate, please do not quit until you can at least replace your income. Please don't do it.
That's exactly where I was going to go. The next question is, some of us who are starting, there are many people on our call probably today who are younger, starting off. They're thinking about just one right now, right? So would you recommend them maybe starting with, philosopher said, Chinese philosopher Sun Tzu, journey of 1,000 miles starts with a single step. Similarly, along those lines, would you recommend somebody saying, okay, first try one investment property, maybe you go through the whole transaction, maybe buying an investment property first, maybe buy 2 or 3, then think about the multifamily, because multifamily is a little bit different animal altogether. Now you're investors and GPLP structure, and it gets a little complicated, right? So you don't want to dive into that right off the bat. So how would you do that? Is there a what would that journey look like if you were advising somebody who's maybe 24, 25 years old, young couple, just have their single family home right now, and they're thinking, I want to go on this journey? So what would you tell them?
Yeah, what I would do is I would find somebody that is, you don't fully know if they're trusted until you work with them, but that seems trustful, and that has credibility, that has done all of this already, and let them know you are willing to exchange your time for free so you can learn, right? And so if it's, or for things like wholesaling and things like that. Now, if you want to do like a fix and flip, or let's just say you want to buy a rental, your first rental, you want it to be a house, right? You have to bring value now. Right now, it's like, oh, finding the deal isn't enough. So now, like, find the capital. Like, do something. Find the capital, or say, hey, I'm willing to, deal with the property management here, even though you don't know how to do it, but you're gonna do it underneath their guidance. So just finding someone, and if you just look at Facebook groups, that's the easiest way, especially with real estate. It's so much. If you go to Facebook, you search up real estate groups in your area, there is so many. Go in there, look at people's profiles, see who has done, they are actually active in the real estate market, and reach out to them. You might have to hear 20 no's before you hear a yes.
We actually had a sister Farah, one of the first couple episodes Umar and I did. She started a similar journey of yours, but she focused on building a portfolio of single family homes. So she's not really veered into the multifamily, but I think she has a portfolio of, I don't know, 100 properties by now. And she had the same discussion. Start with one, start building slowly. And in Chicago, markets in Chicago, there are Muslim real estate groups where you really, I've attended their meetings actually, where this is like-minded in people coming together. They share ideas, deal information, et cetera, et cetera. So some of the larger markets like Dallas and Atlanta, maybe there exists a group where you have people who you trust and you want to bounce ideas off of, et cetera. So that's a great idea. Go ahead, Omar. Do you have a next question?
So usually we wrap up the show asking our guests a couple questions, right? So Sarai, for you, is anyone in your life, it could be anyone, doesn't have to be a person.
Before you go there, Omar, can I just have just one?
One more? Sure.
Yeah, I have to. So yeah, just very quickly. Sorry. What would you recommend people? Where can they find good deals? Both, maybe you can share on the single family side, people want to buy a rental unit or whatever, and also multifamily. Like, what is there? Is a particular website or a resource? Where can our listeners go to maybe buy properties, I guess?
Okay, so for the single family space, you, as an investor, you don't want anything that's on the market. It's for retail buyers almost always. So you want to have deals that are off market. Now, how do you find deals that are off market? You find wholesalers. If you don't want to do the work yourself, find wholesalers. Go on Facebook, type in your market, and type in wholesaling. You'll find a whole bunch of wholesalers. Introduce yourself in the group and say, hey, I'm so-and-so. I am looking to buy, 1 to 2 flips in the next, 2 to 3 months in this area. Please reach out to me. You will have so many people, because wholesalers want buyers to offload their deals. So people will reach out to you. So you need off-market deals because you need properties at a discount so the numbers can work so you can make a profit. So that's what I would suggest for single family. For multifamily, it's more difficult, but you want to get on websites like CRBE, JLL, Marcus and Millichap, Berkadia. And what you do with that, because I make the mistake at first, is I would cold call brokers and they're like, who are you? Like, why are you calling me? So instead, what you want to do is go to the sites that I just mentioned. So for example, you go to Marcus and Millichap, sign up. And then when you sign up, you can save your investment criteria. So I want 100 plus unit buildings. I want B class, C class. These are the areas I want it in, blah, 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 blah. You fill out the whole criteria. And then now you're getting emails from the brokers when properties come out. And when it comes out, then you have to sign an NDA so that the financials can be shown to you. And the moment you sign the NDAs, now the brokers are calling you because they see you in their system. And that's the position you want to be in with multifamily. They have to be calling you. Because if you call them and they don't know who you are, especially starting out, you won't make any headway. I wasted a lot of time doing that.
And just to wrap up my questions, and then Omar will ask one, and one. I'll have one more after that. But if people want to get in touch with you, learn more about what you're doing out there, you can either we can always get that information through our info at my UIF, and we can get it over to you. Or do you have a website or something that you want to have people maybe come in and learn more about your company, your product. Now, one thing I will say upfront is UIF in no way is making a recommendation that you should invest with Sister Sarai. This is purely an educational session.
Yeah.
And truly, Umar and I, from compliance perspective, this is something that our compliance makes it very clear that, hey, guest speakers' opinions are their speakers, but their opinions. But at the end of the day, you are such a invaluable resource to the community when it comes to this topic. I'd love to have some people reach out to you. So if you want to share, I don't mean to put you on the spot or anything, Sister Sarai, but if you want to share maybe a website or something that
Yeah.
what do you want to share?
So my website is really for people who want to invest. So let's just remove that. If you are just interested in learning about real estate and just following the journey and seeing what I have going on, it's very simple. You can find me everywhere: Instagram, Facebook, YouTube now, TikTok, and it's just my first and last name, Sirai Farah. So you find me there, and I am getting much better at posting content, and I like to teach. So I'll be putting out a lot more content for sure. So you can find me anywhere at Sirai Farah.
Yeah, and we'll include that in the show description at the bottom, inshallah, so people will be able to see that info. And that's where we found you. I found you on Instagram, right? So we were chatting there. So, but no, it's that'll be helpful for anyone who wants to reach out. But yeah, we just wanted to wrap up. Is there anyone in your life who inspired you, on this journey that you can think back? Any words of wisdom that came across your way that that led you in this positive direction that you've been going on so far?
I would say Leslie Awasam. He is a multifamily operator, and he was very inspiring because he was able to get to about, I don't even know how many, it's a lot of units, but in 5 years he was able to have 168 assets under management plus, while still being a full-time nurse anesthesiast and being married and having a wife. So it also tells you that you can do this. Now, of course, he has a team and he has partners, so he's not doing it alone, but it was very inspiring to see that, okay, he has a family, he has a full-time job, and he's still able to pull this off. So I have no excuses. I got this.
And this last question I'm going to have is, I'm a big believer in education, as we talked about earlier. So, is there any particular book you would recommend listeners to get started on the journey, or maybe even podcasts that they should follow that they can learn from?
Yes, I think my favorite book that I recommend to everyone is Who Na How by Dan Sullivan. And it essentially just talks about whenever you want to do anything, think about who can help you get there instead of how you're going to get there.
Did you say it's who and how, or how?
Who, not how.
Not how. Okay, got it.
Yep. Because that book saved me a lot of time once I learned. Because when you want to do anything, you think about how are you going to do it. But if you just frame it to who can help you get there, you can get to places so much quicker.
What's his name again? Just so I'm going to put it on my listen list right now.
Dan Sullivan.
Dan Sullivan. What about any particular podcast that you recommend? Or?
Yeah, so for real estate specifically, I would suggest Bigger Podcasts. Bigger Pockets is a good one. And then also for multifamily, I would suggest it's Rod Khalif. So I would, I don't know the exact name of the podcast, but if you search his name, you'll be able to find it.
I just say I listened to Bigger Podcasts for a few years before I said I'm not so much into real estate, so then I kind of pulled back. But that was a great podcast.
It's really into Bitcoin, right? It does.
The opposite of that. I don't believe in Bitcoin, so let me not insult anybody over here. But
no, we don't want to insult anyone.
No. We have our Bitcoin hedge fund manager too. We had an episode we did with him.
We did, yep. Shout out to Ali. Yep.
Ali. No, that's it from my side, Omar. Sister Sarai, any closing comments you have before we wrap it up today? This was a great interview, by the way. It's fascinating.
Absolutely.
Your story was absolutely mesmerizing. Go ahead, sister. Anything you want to end with?
Thank you. Any last thoughts? I would just urge the people who want to get into this, don't get discouraged. It's a lot of work. If you go into it knowing it's a lot of work, you will be better off. And then also just worry about imperfect action. Figure it out as you go. but have it be strategic, imperfect action. So don't just do things just because you want to do them. Make sure they make sense. Do your due diligence. And the biggest key is don't quit. And if you don't quit, you'll outlast a lot of people.
Excellent advice.
Absolutely. Appreciate that, Sister Sarai. Thanks so much for coming on with us. And I'm going to just wrap up. Just thank you, everyone, for joining us on the UIF Community Podcast today. We do hope you found today's discussion to be insightful, inspiring. And I always mention this at the end, don't forget to subscribe, leave us a review, share this podcast with others, in your friends and family circle. That would be fantastic. We really, really would appreciate that. You can check out our website at www.myuif.com for more info on UIF's Islamic financing programs. We offer home, commercial, auto, and select states, and savings accounts, halal savings accounts. So check us out there. If you have any comments or questions that you'd like to direct to our guests today, you can email us at feedback@myuif.com. Again, that's feedback@myuif.com. So until next time, this is Omar Subhani signing off. Take care, everyone. As-Salaam Alaikum.